Daily Gold podcast, covering precious metals, the junior mining sector, and global capital markets for intelligent investors. Now, here is your host, Jordan Roy-Byrne.
Hey, everybody. Welcome back to the Daily Gold podcast. Have another great interview for you. You know, I don't have Greg Weldon on today, but I'm bringing him up because when I think about gold and macro, I always say when it comes to gold and macro, nobody does it better than Greg Weldon. But, you know, I've never thought of that in terms of silver. But when it comes to silver and macro and everything silver, everything that drives it, David Morgan of the Morgan Report, he is the man to talk to. Nobody knows it like him. And that's why I love having him on. And David, it's been too long. Great to see your face and hear your voice. And I don't want to be facetious with this question, but let's just get right into it. You know, I was looking at some history, looking at, silver charts over 100, 200 years. We see gold having this really huge breakout, in my opinion, of a 13-year cup and handle formation. That leads me to want to ask you, and again, I'm not trying to be facetious, is this the best buying opportunity ever in silver?
Wow, that's a good question. So I will answer the question. So if you go back to when I started the website, my original website, the current website has been for at least a decade is themorganreport.com. So just let me state that. That's the website you go to. But in the original website, the domain was silver-investor.com. And the time I launched that website was in about 1999. And at that time, silver on an inflation-adjusted basis was the lowest it had ever been. But if you do the math now, even though silver was under 5 at that time, and now we're in the low 20s, there's been almost a tenfold increase in the money supply. It's been about 9%, ninefold. And so if you do the math again now, you're probably at a lower point, even though the price is higher. This is a hard concept for most people. I know you get what I just said. Because wait a minute, 23 is higher than 5. So how in the world could it be the cheapest price? But you got to look at an inflation-adjusted basis. Are we allowed to share screens on here?
Yeah, I think so.
Okay, well, let's not do it because I don't want to muff it. And I've got so many. I'll send it to you after the show. Maybe you can edit it in or not.
I just made a click, so I think you're able to share, but it's up to you. You could try and share, and I mean we're not live.
Yeah,
or
I don't think I
so.
could find it. It's not on my desktop.
I'll definitely put it in while you're talking. Okay. We can put that in.
So there was a chart that was put out in Forbes magazine that was right after the Buffett purchase. And on that purchase, it showed the inflation-adjusted price of silver going back to like the 13th century or something. And when you look at that, the all-time high price of silver was like $800 an ounce in the year 2000. I think it was the year 2000. And the lowest price was right on that chart, and it had a big arrow there, Buffett buys. So again, but we're basically at the same point. So I belabored it. I'll find that chart. I'll send it to you later. But it's a pretty interesting chart. It's in my file somewhere showing it. And what's interesting is when you look at that chart, silver stayed above $200 an ounce. Remember, we're talking $2,000, we're talking the year 2000. So in constant $2,000, silver was at $200 an ounce for centuries. Then it dropped down to around 100, then it dropped to 70, and it stayed above 70 until we got to the demonetization period of 1873. Right around that time frame, right around the 1900 time frame is when it dropped. So my point being, and one well taken by most that understand monetary history, is that when silver and gold had the exact same function of money and only money, because you didn't have electrification of the United States in the 1850s. It had a ratio of 20 to 1 or less. The contrived monetary ratio of 16 to 1 or the natural ratio of at the time 12 to 1 or anywhere in between. So it's held below 20 for thousands of years. And it wasn't until the last 125, 150 years where you've seen these extremes above 20 because it's been demonetized. No central bank holds silver as a monetary asset. But if they did, and they kept silver in their bank as a monetary asset, even at the ratio of 16 to 1, then you would have a new price for silver. It'd be 1/16th the price of gold right now.
Yeah, there's two things I want to touch on, but I guess maybe I'll try and include them in one question because I don't want to divert. I mean, to answering one, we diverge completely from the other. But I guess first, yeah, talking about silver in the best buying opportunity. I mean, I guess a quick follow-up would be like I was looking at the chart. I mean, 1941 or 42, that to me would seem to be a potential case. But then also looking at, I think it was just the end of 1971 and the end of 2001. Like, I know you know, but those to me, based on the performance over the next 10 years, because you had a strong move, those to me would probably be the two best. Of course, we can't predict the future, and so I don't know. Just looking at the price and the trend historically, those two to me stand out. But I mean, I think you're making the point about relative, like the relative valuation, and so I want to touch on that and bring in, be it the late 60s or 1970 or 71, because it's really interesting to me, Dave, because at those points, I mean, depending on if you look at the gold stocks against the S&P or gold against the S&P, silver against the S&P, even in the late 60s or the early 70s, I mean, inflation had already broken out. We were in a secular bond bear market. It broke in 1965. And yet in real terms, precious metals then were very similar to where they are now, in that in real terms, they were super, super cheap. And that aligns with I think what you're saying regarding silver. You know, the inflation adjusted price is basically at or around an all-time low. So I don't know if there's a question in there in my soliloquy, but I'll pass it off to you to follow up or say what you want to say about that.
Yeah, that's a great insight. So if you go back into 1965, when they demonetized silver from the aspect that was no longer in the coinage. I mean, they officially demonetized it in, again, 1873. But the truth is, we still circulated 90% silver coins in the United States of America through 1964. And so what happened was silver was worth more than the stamp value that was on the coins, but so marginal. A junk bag, or what's called a bag of silver, some like to refer to as constitutional silver. You take a bag of $1,000 face value, be it 10,000 dimes or 4,000 quarters or 2,000 halves, 90% silver. At the time, 65, 66, 67, those bags were worth like $1,100. I mean, they were just barely worth more than face value. But Monex caught on to that. And so Monex started taking bags off the street. And the only people that were really wise enough in the very beginning to my studies to say, hey, we're Gresham's Law, and say, hey, I'm taking out the silver and I'm using these Federal Reserve notes instead, or these cupro nickel quarters and these cupro nickel dimes, were the vending machine guys. Because in those days, all these vending machines were mechanical, and you put 2 quarters in and you pull the handle and you got your cigarette pack or the candy bar or whatever it was. So the vending machines had all these 90% silver coins. And believe me, those guys scarfed them up like pronto. So they disappeared from circulation fairly quickly, not instantaneous. And so Monex just kept stacking these bags. They go to their bank and they say, I want a loan to value on these on face value. So they put $1,000 bag in the bank, and the bank gave them $800. And they went out and bought another bag with that $800, and then they bought another bag. And they kept accumulating. So they basically just saw a arbitrage that was very small, that of course grew. I mean, a bag of silver now is $25,000. So people, 25,000 fiat dollars. They say, well, wait a minute, silver hasn't done anything. Well, in my lifetime, it's gone from 1,000 fiat, where it matched the coin value, to 25 times that amount now. I mean, 25 times, and now it's taken, my lifetime. And, we could go into what the silver market hasn't performed and all that, and inflation adjusted, it's as cheap as ever. And all that's true. But the point is, no one paid much attention to the silver bull market at the beginning, except very few. Then you got in the 70s, and inflation really started to come into the consciousness of people. And that's when you really started to see the markets start to move. And so silver had a run, I would say, from the early 70s through 1979, where it hit an all-time high of $6. So you got to remember the monetary price of silver is $1.29 per ounce. Now, 10 years later, 15 years later, it's at $6. And then what happened was we got into what I call the last phase, the third leg up, or the awareness phase. This is where people become aware that their money is really losing value. And so silver went from January 1979 to $50 in January 1980. So in a 1 year time frame, it went up 850%. And yet it had taken 10 years to go from, let's say, $1.50 to $6, to do to go up by 400%. It took 10, 12, 15 years. So that shows you, when you get into a situation where people don't trust the currency, these markets can go nuts. Now, silver outperformed gold by a great deal at that time for a couple of reasons. Gold was illegal to own through, I think it was 72 or so. So the only people playing in the precious metals in the gold side were by gold mining shares primarily. There were no ETFs. There were Makata options. Makata was a market maker. They had their own options. They were not even listed. They were private, but there was a market there. But primarily it was just buying mining shares. And so the gold shares that were bought were primarily South Africans. But silver was available as a commodity and available on the futures exchanges. And this is one of the reasons the Hunts got in there, was because they felt silver was undervalued relative to gold. And in the early days, Jordan, you may or may not know that there were two silver markets on the exchanges. There was a silver bullion market, which is your commercial 1,000-ounce bars. And there was also a silver bag market, what I just described. And I forget the contract on a bag. I think it was 5 bags. A bag of melt is about 712 ounces of silver. So there's an arb that could be done, arbitrage between the value of a contract of bags versus a contract of bullion. And that was played back and forth for a while. So when Hunt was doing his thing, he was asked for delivery several times. And at one point, the exchange said, well, we can't deliver the bullion. We're sorry. Will you take bags instead? The equivalent in silver, it's just what the melt value. And Bunker said, yeah, I will. But he could have said no. No, a contract reads, 1,000-ounce bars. I want 1,000-ounce bars. Kind of would have pulled their pants down right then and there. But he didn't. He was a nice guy, and he took bags instead. Well, the bag market dried up. There wasn't enough liquidity in there to really hold on to that market. So that's something to really think about. When you have coinage circulating in the United States at a sufficient level through 1964, and you can't, glom together enough bags to satisfy the small amount that was actually physically demanded, and you had to close that market, that right there tells you something. But moving forward, the Hunts got obviously very heavily into silver, but they also had a gentleman that I actually met several years ago in Dallas, and his whole job was to do research on gold stocks for the Hunts. So they bought a lot of gold stocks. They bought a lot of silver. They had some gold, but gold wasn't their focus primarily. The stocks they had a focus on, but silver was their main thrust, as you know.
Do you think that this time around, because of the internet and just social media and rapid communication, that that could really accelerate the coming move in silver? In other words, you look at the 70s. I mean, it was, I guess, gold really took off first, but as you're pointing out, I mean, silver did do very well, but especially after that first move, it consolidated for a little bit longer than gold, and as you said, then really exploded. I mean, do you think this time around, I should say, how do you think it will be different this time around? I mean, will it be a faster move? Just your sense of how this bull market in precious metals evolves and how it may or may not be impacted by the speed of technology and communications today.
Yeah, it's an excellent question. I've kind of rethought it, Jordan. I mean, if you would have asked me 5 years ago or beyond that, I would say, yeah, absolutely. Because of communications and social media and all that we have, it'll go, 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 go. I've revised that to say it has the potential to. The reason I use the word potential is the obvious. I mean, we've got this mass communication. Everyone can find the price of silver or gold on their phone instantly. The problem is there's a big differentiation between 1970 and 2024. One is education. I mean, everybody in my age group knew that silver was money, whether the government told them it wasn't or it was, they knew what it was. That's been lost. And the amount of obfuscation of other investment vehicles. I mean, back in my beginning at age 16 in the stock market, I mean, we had the DJI, the American Stock Exchange listing, took up like a middle column in the LA Times. I mean, I don't know how many stocks were on it, but probably a couple hundred. The over-the-counter market, now called the NASDAQ, had very few. So there wasn't a lot, so gold and silver are right in the mix as something most people thought about as an investment vehicle. Today, and I would say primarily through the Wall Street machine, they never really push gold or silver, really never talk about it. I mean, I've been on national TV, I've been on the main financial channels. I haven't been on them in years, but when silver and gold had that 10-year bull market from 2000 2011, I mean, they were making a headline. I mean, gold had an 11-year bull market. It went from 252 to about 2000. So that was a pretty good run. And then, of course, we've had, as you said, this, was it 13, 14-year cup and handle that we've finally broken out of, which is important. So there's a lot of competition. And I think there's been what John Perez calls the silver psyop. And that is that all these cryptocurrencies that are making fortunes out of the software stuff has diverted a lot of people that are aged 20 to 40, 20 to 45 out of what money used to go into the precious metals as a high risk, high reward vehicle into a get rich quick scheme with some type of cryptocurrency. So if you took that money and you put it into the silver market, you'd probably be at 3 or 4-fold where we are right now, but it's not. It's sitting in crypto. Now, what's going to cause the rip running roar into the metals? And it's people that are educated. And how many are? I mean, if gold really takes off and is starting to, are people educated enough in North America to say, oh, I got to get out of these stocks that are falling into gold? Maybe. I mean, with social media, I mean, you can be enlightened about real money pretty quickly. It doesn't take like a year's worth of study. It takes about, 2 hours worth of learning monetary history to figure out that all fiat fails and we're on our way to the bottom. But how many people catch on to that meme, I don't know. So it's a long answer, but I think it's an important answer because I have thought it through and said, you know what, I could be wrong. Not fundamentally, not wrong about monetary history, not wrong about gold and silver being money. None of those things. Those are facts. What I could be wrong about is the ability of people to recognize what's really going on and take action. They did in 1980. Will they do it the next time around? Remains to be determined. I don't have as much faith in the ability of the community psyche outside of us, metals heads, to see what's really happening. They'll be addicted to their crypto and, oh no, I'm holding on for dear life. It's going down, but it'll come back. And, in the Great Depression, there were a lot of things that never came back, including a lot of the banks that were closed. The only banks that reopened were the ones that were favored by the political elite that said these banks can open and the rest are gone. So if you happen to pick a wrong bank, your money was locked up and went to money heaven. It never returned.
Just to quickly follow up on what you said, David, I think the price and the trend is what gets people excited.
Yeah.
I mean, crypto's been in a bull market. It's been following the stock market in the tech sector for over a decade. While precious metals have been in this secular bear, albeit you could say they've been strong for being in a secular bear, much stronger than how it was in the 80s and the 90s. But yeah, I mean, crypto has been a moonshot. I mean, if we see, I tend to think if we see gold moving up towards 3,000, silver moving up towards 50, I mean, I think there's nothing like price action and people seeing things moving up and liking to gamble. I tend to think that will get get all these people involved.
Yeah. Yeah, I agree, and I do think it will. I mean, I think I'm a big believer in William O'Neill. I got to study under him, luckily. I mean, when he first started IBD, I actually went to one of the first classes, and he taught it himself. I mean, it was just getting started. Wonderful guy, very smart, and basically most of his stuff is on momentum theory, cup and handle, and momentum. And so I agree. I think that's probably the most powerful. And if we're coming out of a cup and handle with gold, I mean, if you look at the chart for silver, we really have about a 50-year cup. And gold, as you said, what is it, 14, 15 years? But regardless of cup and handle formations and how powerful they are, let me go back to Bitcoin, because I'm not a big Bitcoin aficionado, but I am free market. If you're a Bitcoin maxi, good for you. I support your ability to, figure that out on your own. That's the way to go, and it's the best, and blah, 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 blah. That's fine. I don't care. It's your life, and it's your investment. However, here's what I want to poke some fun at. They brag about the 21 million, right, is the lifetime cap of Bitcoin. Well, in silver bar territory, there's only 3 million. There's 3 million 1,000-ounce bars, not 21. There's 7 times more Bitcoin than there are 1,000-ounce silver bars. So you want a limited market of real money, or at least I consider. The word silver and the word money are the same in 14 languages. So you want a limited supply of some. Now, the truth is the silver supply does grow every year, but it also goes into deficit where the above ground supply actually gets eaten up, which is where we've been from 1990 to 2005. We lost 1.5 billion ounces of above ground supply. That's going to happen again, or it's projected to happen again, starting basically right now, based on industrial demand alone. So if you've got 3 million 1,000-ounce bars and you're starting to eat away at it just because of industrial demand, think about what that would do for the monetary aspect.
Okay, Dave, it's been great talking about the history, and you're thinking about all these larger issues, but let's get into the here and now of the market. So yes, we have gold has broken out. I think it may have touched 2,200 on the day we're speaking. There's so many questions I could ask you, so I'll try and keep it simple and as quickly as I can. To me, I see 26 as really strong resistance on the monthly chart, that 26 to 28 area. That's my sense is we won't see silver really gain a lot of momentum until it can pull away from 26 to 28. You don't have to necessarily agree or disagree with that thought, but I'm just curious how you see, looking at the price action now we got the wind of a gold major breakout at the back of, the entire sector now at the back of silver. How do you see silver performing for the rest of this year?
I see it performing fairly well. First of all, but agree with you. I agree, Jordan. 28, excuse me, 28 is the more or less magic number. I went through the Ken Roberts School of Technical Analysis, and all these books in the back. I think John Murphy that does stock charts, which is one of my most favorite paid for websites for my work, and I have several. And we're back on point 28. Is it? I think it's like the Dow theory, where one has to confirm the other. As far as I'm concerned, gold is broken out, but silver hasn't confirmed it yet. I actually did this for my paid subscribers. I might have said that already yesterday or last night. And I made a video saying until we get above 28, I really don't see a confirmation. And I want to see a confirmation. I want them to run. I want gold and silver to go. And there is a high correlation between the two, but it's backed off over the last few years. was an 85% correlation. 85% correlation is pretty darn high. Now I don't know what the number is, but it's probably somewhere around 78 or so. It's not nearly as, not as highly correlated as it once was. But as you pointed out earlier, Jordan, once this goes, there's a point of inflection, I'll call it, where gold's at a certain price. So I'll make up a number, 2,500, 2,550. And your new money that's going to push the price higher says, man, 2,500 an ounce, I can only buy one coin. But you know what? I can buy, a 10th bag of silver. I'm buying silver. That's why these penny stocks do so well. I think it's an ego trip. It's like, they know they're never going to be a multimillionaire, and their friend, in the bigger neighborhood or whatever owns, 3,000 shares of IBM or something, which would be a pretty substantive amount. But they own, 27,000 shares of a 3-cent penny stock, and they feel like a big cheese because they own so many shares, Kind of moves back to what I just said about silver. It's like, man, I can't afford that gold territory, but I sure as heck can. And that's what happened in the 70s. The mad dash, something really took off. And that was the general public said, oh my God, our money is going to become worthless. I need to hedge. I can't afford gold. I'm buying silver.
When do you think, well, I guess, again, I have two follow-up questions. Well, I'll save that one about when does the public start getting in. The first one, and I heard you made this point. It was so like eloquent 15, I don't know, yeah, so maybe 15 years ago or so, about how when a market breaks out and makes a new all-time high, from a base, how then everybody who bought that asset or stock, whatever it is in the money, has had a profit, and how powerful that is moving forward. And so we've just seen that in gold. And so, I hope you remember this idea. Could you just nod your head?
Oh, I do remember.
Yeah,
I've said it recently.
Yeah. Can you state this for our audience? Because I think it's just so important. I mean, particularly when you're breaking out of a 13-year base, as gold, has done in the last week, and how that will, because that will apply to silver moving forward at some point.
Right. So this applies to markets. I mean, yes, I specialize in the metals, but I'm a student of the markets generally. I mean, I want to know all these markets. I don't need to know all these stocks. No one can do that solo that I know of. But regardless, so this is market theory, which really isn't theory. It's common sense. But let's take any stock. It could be a commodity. It could be whatever has a price that changes. So if you buy a stock at, say, $5 and it drops to $1, a lot of people hold on and they'll wait to break even. So anything that goes from $1 up to $5 is called overhead resistance. And you can see that on a chart. And I'm not trying to be technical, Jordan, I know you're following every word. But let's say there was a big drop from $5 down to $3 in a matter of 2 weeks. And then it stayed at $3 for 3 years. And then it dropped precipitously in 2 weeks down to $1. So from going to $1 to going to $3 is not very hard, because it only was in that range of 3 to 1 for a couple of weeks. So any new buying pressure will take it to $3, but it'll stay there for a long time, because that overhead resistance at 3 was for 3 years. And there's a lot of people that go, oh man, I just want to sell and break even and get out of this thing. I hate it. I'll tell my wife we didn't lose any money, and I'm going to move on to Bitcoin. So that's overhead resistance. And then, of course, it'll go back up to 5. Once it gets above 3, it'll launch up to 5 pretty quickly, because it only stayed between 5 and 3 for a couple of weeks. So that overhead resistance space is very small in time. So it'll get back up to 5, but maybe it started at 5 for a long time. So take that to work through that overhead resistance. Once that's accomplished, you're at a new high. And everybody that's held it from the bottom all the way up, or any new buying that held it from 3 up or bought it at 5 or whatever, that still owns that stock, everybody has a problem. And now the psychology changes dramatically. Everyone that owns it is not going to sell. And that's what happened in the GameStop episode. It wasn't that these kids were so smart. It's just that their leader said, hold, don't sell. So now what the availability of that stock is, the float is small because there's nobody wanting to sell. So there's no float. So any new buying puts a lot of upside move in that stock or commodity because the float's so small. There's not very much available to buy. So if you're buying a small amount, but the float's very small, it has a big price impact. So now it goes higher. So now everybody says, well, I don't know how high is high. I'm holding on because I'm greedy and I know this is going higher. And my leader told me to hold. He's still holding. I'm holding. So now the float's even smaller. So anything new buying puts it even higher. And that's how markets move. And that's again how GameStop did so well against the hedge funds, because a Wall Streeter probably would have filtered out on the way up at certain levels, probably use an algorithm to help them get out, looking at probabilities. But these, dumb money sat there and just did what they were told. They just held on. And that's what will happen in both the gold and silver markets, as you said, Jordan. And that's how markets move. So really what Bill O'Neill teaches is to buy on a cup and handle breakout. And usually, not always, that's a new high. So now the psychology is how much higher is it going to go? And we don't know. And depending on the market conditions, how well it's received, what the float is. Thing about silver is the float is very small and getting smaller all the time because you have this buyback program called industrial usage, which is about 60% of the market now. So it's like a buyback program in a stock. You got this half the market or greater that's being bought back every year, no matter what the market conditions are. So the float is really 50% of the overall silver supply. The silver supply is 1 billion ounces with mining and recycling, and 500 million is eaten up every year by industry. The float is really 500 million. So if you bear that in mind, along with the ability to see value, where silver is probably the most undervalued asset, not just commodity, but asset, because anytime you can buy a stock or a commodity for the price of production or lower and have some patience, you will make money. Otherwise, the whole thing goes out of business. Silver will never go out of business because without it, we can't even be talking on our Zoom link. We need silver for all electronic communications. So I'm still very bullish, but it's been disheartening knowing what I know and seeing, diversions in other metals. Not saying everyone should own silver. I mean, I think everyone should, but in the right amount. And what's the right amount? And the idea is what's right for you, maybe 10%, maybe 5%, whatever you can sleep well with. Like if it doesn't ever go up and you bought 5% of your portfolio, would you be able to sleep the rest of your life? And the answer for, I think most people would be yes, but I can't answer for them. It's an individual choice. But the problem is people get educated very quickly because it's not a fast, it's a fast learn. You understand how fiat fails and why it fails and why we're getting scammed by the political and banking sector. And so people go in too large. It's like, oh man, it's inevitable that it's going to go higher. It's absolutely guaranteed. And then they wait for 10 years. And they got all that overhead resistance went from 252 to 2000 and dropped all the way down to 1150, right? Now it's got to eat through that 1200, 1300, 1400, 1500, 1600, 1700. It got it all the way back to make that that what we call that round trip, 2000 all the way down and all the way back 2000. Now you made your U or your cup. And now your handle, usually there's some strategies at the end that sell around that level. Usually it goes down to the right, which is what you want. And then you break out into what we just talked about. So it probably was a little long-winded, but I love it because it's such a good way to understand in reality how markets work and how to find them and what to look for as an opportunity.
Yeah, I mean, something I've said, I think in a decade or two, like the technical analysis textbooks of the future, this gold cup and handle breakout and silver breaking above 50, those are going to be really prominent in technical analysis textbook of the future. I mean, I know I'm getting off of my soapbox, but whenever silver breaks 50, to me, that's going to be the biggest breakout of all time. I mean, if
it
we
will
think,
be
yeah, I mean, because if we think, okay, we're in a new secular bull market for precious metals, like we're in the top of the first inning now. Like, I mean, at least I think it's going to last a decade or so. We know that gold's already broken out. Silver, we know everything that you've stated. about the value and how cheap it is historically. I mean, you look at historically where everything has peaked 4 times in the last 200 years. You apply that to where gold and silver could peak in the next 10 to 15 years. I mean, it's like their prices, they're going to go way much higher than people could even imagine. So I guess, yeah, coming back to it, so you think about the bull market that lies ahead, and then you think about just silver breaking above 50. I mean, to me, that will be such a historic event. I can't understate it. I mean, how? Because we already have gold breaking out of the cup and handle. When silver breaks above 50, I don't know if there's a question here. I'm just rambling on and on, Dave. But I guess the question is, like, how soon could we see that? I mean, is that potentially?
Well, that's the thing. It'll
yeah,
go vertical. It could be.
yeah.
I mean, you could go from 50 to 100 in a week, and
No,
that's all.
yes,
Change.
I
And
agree with
I
you.
don't think it'd go that fast, but that's the idea. Because
Yeah.
again, everyone that's ever been in the silver market at a nominal price of 50 is holding it a profit. On an inflation adjusted basis, they're not, but they don't care because it's a number, and that number is 50, and they know that 60 is a bigger number than 50 is. And so even though they might have bought $50 silver in 2011 in April, or $48 silver, it's how many years, 13 years later or whatever, there it is. And there's no overhead resistance, and there's nothing moves like soybeans and silver. I mean, that's back in my commodity trading days, but it used to be a true statement. I don't follow all the futures markets like I used to, but anyway, the point is it could really go really fast. And this is where you're going to get this double edged situation because industry has to have it. And that's 50% of the market. And if the invested community starts pouring into the silver market like they did in 1980, late 70s, you will see competition for the metal. So the investors are saying how high is high. And normally just investment demand alone will burn out, and it will burn out. But the problem is that you have industry that has to buy it at any cost. Because if you're making a $2,000 refrigerator and it takes $20 worth of silver, and silver goes up tenfold and it becomes 1/10 the price of the refrigerator, you're still going to buy it. It's still not the major cost of the refrigerator. 90% of the refrigerator costs more than this tenfold increase in the silver price. And that's true almost across the board. The only time you get into where silver, for silver's sakes, will be detrimental to the market is silverware, which is only about 4% of the market anyway, and silver jewelry. And that's kind of a one you got to think through. Because if silver really starts going up, maybe the girls will switch from gold to wearing silver because it's moving. It may become a meme where people rather buy silver jewelry because it's cheaper than gold and it's moving like crazy. Well, that one's harder to predict. But regardless, I think the best is ahead of us. I don't know if it'll be a 10-year market. It could be. I really don't know. I do know and I'm not a big Elliott guy, but the third leg up is where I got the 90% of the move comes in the last 10% of the time. And as I've already explained, 1979 to 1980, it went up 850%, 8.5 times. Yet it took it 14, 15 years to go up fourfold. It went at double that and so if you do the math, do the arithmetic, it came out, I think it went up 87.5% in 7% of the time was the actual math on it. Does that mean the next time it does that exactly? No. It's the idea that you keep pounding on, which I'm grateful you are, is we haven't even begun yet. Once this thing really goes, it'll go and there'll be people that buy it at 28 on the breakout and it gets to 35 and maybe they're leveraged, maybe they're not. And all of a sudden they are so happy. And, a year later it's at 70 and their wife is saying, well, why'd you sell that silver? Well, you're always on my back about having it in the basement. Well, I got rid of it. Anyway, it'll be a fun time.
Yeah, I guess last question. I know we could talk all day, so I'll just limit it to one more question, Dave. But so moving forward, I think we both agree that 50, I mean, psychologically, yes, 50 is important, but that's not the biggest resistance left for silver. I mean, do you think there's I mean, is it 26 to 28 for you? Is it 34? Have you thought
Yeah,
about
no, I'm in
that?
that camp. I think 28's the first marker. And then, knowing the futures markets like I do, and I'm always learning more, round numbers are very interesting around the futures markets. So you never want to be selling at a round number. That's why when I called the top in silver in the end of April 2011, I called it at 48 something, because to get to 50 wasn't achieved yet. And I'm not that greedy. I learned the hard way, telling the market what to do. The market was telling me it's exponential. I was getting so many subscribers in a day. I was making more money in a day than I was making in a month, 2 months earlier. So I said, this is it. This is the top. So I called the top, and it was within 2 days of the top. It wasn't the round number, the big 50. And it came down, and I had some criticism from some in our industry saying, you have lost it. You are going to be known as the goon, not the guru. Silver's going to 100, don't you know? And you are going to look like an absolute fool. And I'm so sorry to bring this bad news to you, my friend. And yet it turned out I called it almost exactly. Never got an apology, never got, your shit, never got a you're a lucky guy, never got any of that stuff. But anyway, back to you. I don't know if I even answered your question. Ask it again. I might
No,
have.
I think you did. Just moving forward, what do you see as the most significant? Well, not significant, but what's going to be the stiffest resistance for silver moving forward? I think you said 28.
Yeah, 28 to 30. Once we get past, so I said the round number. So my continuing that thinking is, once you get to where 30's the support, like 2000 was for gold, those round numbers are important for support or resistance. So when gold got to that 2000, again, I put it in my video updates. I write the newsletter with help. I've got 5 on the staff, and I put it out every month. But the in betweens I do by video. And these round numbers are really important. So I said that for months now, that 2000 has become support for them. So it's got to build a base around it. And it will. And here we are, as you said at the beginning of the program. Same thing for silver. 30's that number. So we got to get to that 30. Oh my God, silver's in the 30's. Oh, and then it goes to 29, and maybe it goes back to 28, knowing how volatile silver can be. But 30 becomes the new base. And once that builds, it'll be similar to gold. And once it goes from 30 to 33, it does a 10% move. And I expect that we could see what I saw in my early days, and that are limit up moves. I mean, you used to see limit ups in some of the commodities, and that was where the exchange says no more buying. It's gone up the max it can. We're going to stop the exchange for right now. And sometimes it go up like 2 or 3 days in a row, limit up. Wouldn't that be fun? So I think we've got some good times ahead of us. Gold's leading the way. It doesn't bother me. I do want to see silver confirm here fairly shortly. Will it this year? I think it will. We're in March, so we've got 9 more months. The world is not getting any calmer. There's more uncertainty than ever. The big boys are moving out of the stock market. If you're overexposed to stocks, I'd take a hard look at that. If you're underexposed in metals, I'd take a hard look at that. If you think a currency is going to save you, just do about a half-hour read on, the new money or any of the classics on the Weimar Republic or any of the, let's say, monetary schemes that have taken place in the past. And by the way, I just want to add this because it's kind of important. My friend Jim Poplava, who runs the Financial Sense News Hour, did a study one summer years ago. And I don't know how many books he read, but what he found out and concluded and gave to me, so thank you, Jim, was that every time there's been a monetary panic, if the monetary panic was based on an unbacked currency, they hyperinflated it.
Well, I think we got to leave it there, Dave. I don't know. We could follow up that comment, but yeah, love Jim's work. Love your work as well. It's so great to talk to you about the history of silver and all these markets, because nobody knows that better than you do. And as this bull market gets going, I hope we can speak more regularly, do more regular interviews. And but before I let you go, just tell our listeners your website, where they can go to subscribe, what they will get from you there.
Yeah, the main site's themorganreport.com. Just get on our free email list if you want to see my work for free. It's what I do for free. Of course, I have a paid service, is on the blog. And then I just want to shout out, I've got a documentary I'm making called silversunrise.tv. Silversunrise.tv, I decided not to write another book, Jordan. This is a film because people, they're ADD. Even I'm catching ADD these days. But I don't read as much as I used to. I admit it. Anyway, the movie's about the stress of money. Because if you type into a search engine, what's the number one factor depressing people or stressing them out or causing hardships or whatever? It's the money problem. Most people don't have enough, or they're working two jobs to make ends meet, or they don't ever feel their self-esteem is as good because they lost that IT job that paid them $150,000 a year, and now they're working two jobs and only making half that much. And all this stuff revolves around the inconsistency with an honest monetary system, which is my life's work. And so that movie is about the problem, and I hope the problem's like just the underlying tone of the movie and solutions. And I'm going to have some very notables. I interviewed G. Edward Griffin already. He's one of the stalwarts in the conspiracy theory / money because he wrote this Creature from Jekyll Island. Foster Gamble from the Thrive series, Thrive 1 and Thrive 2 will be in the movie. David Icke just responded and said will be in the movie. I've asked Dr. Shiva, who's running for president of the United States. He said he would be in the movie. I'm angling for Stephen Greer of the UFO fame because his Lost Century movie does a lot about the lost energies from the zero-point field and other technologies that have been bought out or suppressed. And energy is the key, not money. I mean, I won't speak for you, Jordan, but how smart you are. I'd say, people say money makes the world go round. No, money makes transactions go round. Energy makes the world go. And if we had free enough energy for everybody that costs next to nothing or costs nothing, we'd have a different planet right now. And so that's one of the big thrusts in the movie is that, and also the spiritual aspect to it. And this is something very few people do. I do it in some of my podcasts, but this one's about, can we, as Einstein purportedly said, you can't solve a problem with the same consciousness that developed the problem. You got to go to a higher level. So one of the film clips in there, Jordan, is this guy, Howard Katz-Vella. And he's a German scientist, very brilliant guy, in my opinion. And he's done speeches all over the world. But one of the speeches he did, and he did it a couple of times, and I took the clip under the fair use agreement, he talks about teaching apes to use money. And it took the biologists about 3 days to give the apes a bunch of coins and showed them how money worked and how the exchanges worked. So they put money into the ape community and they started trading. After a few weeks, the boys were starting to cheat on each other and the girls were starting to prostitute themselves. So the biologist said, something's wrong here. Let's go get the money back. So they walked in to get the money back and no going. The apes were addicted to it. They started to beat up the biologists. So then they did a, step back and did a big, a deep breath, and they said, what's going on here? And what they determined, or what they stated was, it's an addiction. It's a gaming addiction. And that we all have this instead of going back to, the tribal community. And I'm not suggesting we go back to the tribal community. And I'm just quoting Howard Katz-Vella. So is this David Morgan saying it? Yes, it's my mouth uttering the words. Am I agreeing with it? Yeah, I think I partly am. I haven't decided. It's more for the view of the documentary. But what he said is, in the older days, you did it out of love. The tribal community gave you a blanket if you needed it, and people weren't hoarding more than they needed. They just trusted and lived in a community, and everybody pretty much thrived, like the Thrive movies point out. And in the gaming addiction, it's based on scarcity. We'll never have enough. And you look at people that have so much. And another clip out of another movie called I Am, I'm going to take, because in that movie, a guy's multi-millionaire. He's bought his second mansion in Beverly Hills. He's got his second private jet, and he's just unfulfilled. And he starts looking at his life, and why do I have all this stuff that everybody says I have? And if I have it, I'm happier than hell. I'm miserable. What's going on? So he starts to examine his own life. And he really downsized it and was much happier. And what he pointed out in the movie, I'm getting to it, is in the 30s, we're in the Depression, but there was some opulent wealth around. People are showing off their mansions and their 3 cars and their private schools and all this stuff. The general public at that time in the 30s thought anyone that was so showy with their wealth was mentally ill. Factor that one into your thinking. So the movie, The Silver Sunrise, is going through all these things. We're going through money being a solution and a problem. It's just a thing. It's like a gun. It's not the gun. The gun doesn't have an intent. It's the intent of who uses it. Uses it to bring food home or uses it to rob a bank. I mean, it's the same tool, but it was used for different purposes. Banking's the same way. Money's the same way. If you could buy a politician of your choice, it serves a different purpose than if you're helping rebuild the school in your community, right? So I could go on and on and on. Thank you for being a great listener. I'm passionate about my movie. I do need some help, though. I need some donations. I funded a lot of it myself, but I'm kind of out of that ball game. And we need to start doing these interviews. I need to get another whack of funds to be able to start doing these interviews. But anyway, thanks for letting me drone on about it, because I think it's a good way to reach more people and also get them to think. One of my main purposes, Jordan, is like you. I want people to understand how the system works, why it's not really fair. But beyond that, I want them to critically think. I want to bring critical thinking back into the educational system where people are taught to think. And unfortunately, they're programmed or they're indoctrinated. And people like you and I have stood out there at the tip of the spear telling people, wait a minute, think again or rethink it. So thank you for your time.
Oh, David, thank you for your time. Thank you so much for coming on, and look forward to speaking with you again. Hopefully in the coming months, we can see how everything is progressing with this new secular bull market, as I like to say. And I think we have a lot of exciting times ahead in gold and silver as well. So thanks so much, Dave.
You're welcome.
Thank you for tuning into the Daily Gold podcast. For more interviews, editorials, and analysis, log on to TheDailyGold.com. And for premium coverage of precious metals and the best junior mining companies, visit TheDailyGold.com/premium.